Good morning, traders. Today is Monday, March 27th. My name is Charles, and this is the Pirate Traders live stream. Welcome one, welcome all. Do me a solid favor, please smash that like button. Those thumbs up first thing in the morning, they really, really do help the stream out, and it would mean the world to me. All right, well, the last couple days of last week were absolutely insane. I mean, these couple of days were just as ridiculous as a market can be. Balance inside of balance inside of balance, making everything extremely unpredictable. But we have a little bit of a clue this morning. Okay, so all this chop and grind that the market's been doing over the last few weeks has left behind a ton of weakness below. Okay, just weakness after weakness after weakness. It has also left, with the gap up this morning, a large gap from where we are going to open in a minute here to yesterday's high, to Friday's high. That gap will give us a clue of what to expect moving forward for the rest of the day and maybe even the rest of the week. So what that gap tells us, the combination of the spike up at the end of the day yesterday and the gap up this morning tell us that we have momentum to the upside. So that is bullish. Right out the gate this morning, we should be feeling a little bit bullish, thinking that, hey, we have momentum. The market is telling us it does. But of course, the first order of business for the market will be to try to fill the gap, to try to get back down to yesterday's high, to Friday's high. So if we don't, if the market tries to get down there and it can't get to yesterday's high, well, then we know that momentum is in control and they're going to keep taking the market higher. So that would be bullish to see. Even if they came all the way down and got to Friday's high, found support there at Friday's high, didn't need to come back down below the base of the spike up, that too would be bullish as what we call a gap and go, which would be a sign that the buyers are in charge. The momentum is to the upside. Only if we fill the gap and break the base of that spike would I begin to get bearish. But as soon as we do, I will become very, very bearish because there's a lot of weakness that we left behind on Friday that needs to be repaired. So if we get back into yesterday's range and we start to spend time and bring in volume down here inside Friday's range, I will get bearish to start to pull back and repair those weak references one after another. But that is not the way I feel right now. Right now, I feel bullish. Right now, I feel like the highest probability is that the market is going to find support somewhere inside this gap and then continue higher. How? Charles, how on earth can you be bullish? If you know the market's got to go down, how can you be a bull? Well, because I know what a spike up followed by a gap up is telling me. It is telling me the momentum is in the favor of the buyers. So all we need to do is give the overnight buyers a chance to take profits and then give the new buyers a chance to get in. Where that level will be, well, the market's going to tell us in 1 minute when it opens. First order of business, looking for a gap fill down towards yesterday's high. Can they find support? "88 people hanging out, only 28 likes. That means 2/3 of you hate me. Come on, get after it. Smash that thumbs up." The market is open. So, of course, all gaps increase the odds that the market will try to fill the gap. It is worth noting this is a 20-plus point gap. That is a large gap. Large gaps often don't fill on the first day. So the very fact that it is this large increases the odds. We'll find support somewhere inside that gap. Good morning, Andrew. Welcome. David Cooper in the house. Nap. Happy Gap and Go Day. Nap. Gino, good morning to you. The Shaw is here. Scooball in the house. Tim is here. Philip, Pavel, Frito, Cortman, Crispy, Mike, David, TVES Trade Monkey, Darth Liquidity, Jay, and David. Welcome, welcome. And Al. Buenos dias. Let's get ready for a gap fill. Passing back through the opening price increases the odds. They're going to try to fill the gap. Let's see where they find support. Gio says, surprised to see you on the YouTube again. This is a one-time only. Just here to promote the boot camp in 2 weeks. But first, let's figure out if we're going to get a gap and go. Scooball says this range is pretty narrow. Yeah, I would just give them a minute here. It's the chop bots. The new normal of gaps is that they don't do what they're going to do right away. They chop for a while first, and then they do it. The good old days of an instant gap and go are gone. Gap and chop and then go. That's the new norm. So I know you're thinking, you're like, well, Charles, is this a gap and go? I mean, we passed through the opening price. We pushed back above. We're now bringing in new buyers at a higher price. Isn't this bullish? I would say it is potentially bullish, but I'm not bullish yet. And the reason is because if you look at the ticks, they're still all the way up here. Okay, they're at like positive 1,000 right now. So that tells us that the inventory is still being held by these overnight traders. They have not had a chance to take profits yet. And good for them. Maybe they're going to be able to take profits up here at the overnight high. But until they get out of their trades, it's hard to trust the new buyers up here. So I'd like to see these ticks pull back a little bit closer down towards the zero line whilst we stay above the opening price. Then I can really trust it. Otherwise, we might just be waiting for those overnights to take profits. Or whatever just happened. Amir says, how do you enter a trade on a gap and go? Well, let's say, for example, the market were to be coming down to here, and it's hitting a level you think is support, and you're watching the ticks, and you're seeing that they're holding at that zero line, and you're saying to yourself, boy, this looks to me like a gap and go. Well, then you're simply going to ask yourself, where do I think this thing can go? If it is a gap and go, how far to the upside can it be? Let's say you think you can get all the way up here to 40.40. You know there's a weak reference up there that needs repair, so you think gap and go should be able to get me up to there. You then ask yourself, from the point where I want to get into the long trade, so let's say you wanted to buy right here, you would say to yourself, where am I going to put my stop? Well, if it's a gap and go, you'd really have to put your stop down there below the gap fill. And so then that would be a one-to-one trade. Not that interesting. So you might say to yourself, well, I guess I can't get into that. But what if I wait till it pulls back a little bit lower? What if I wait till it gets to that next support? Well, now my risk to reward on the trade is less, or less risk compared to my potential reward. I also have a higher probability of knowing the trade will work in my mind. I can be more confident because I first watched the market find support here and then was waiting for it here. Well, let's say even that's too scary. I can't do it, Charles. I can't do it. Too much risk for me. Well, then one might think to oneself, the lowest potential area to enter a gap and go trade would be right at the previous day's high. Today, the market gave you a wonderful level to put a stop just below the base of that spike, right? If it's going to be a gap and go, it should hold above that spike. So if you didn't want to get in here and you, oh my God, and you didn't want to get in down here, you could get in here and then your risk would be much better. So there's lots of ways to trade the gap and go. Which one's right for you? All right, guys. Well, unfortunately, they're doing some kind of maintenance on my building. They're always doing something on this building. It drives me nuts. And they're making a ton of noise. So I probably won't be able to do a lot of talking today because there's going to be a ton of noise. But I will do my best to point out what's going on the charts and kind of give you brief updates here and there. So this is a gap and go. This is bullish to me as long as we can stay above the current low. If we come back down through 40.18, then they're trying to fill the gap once again. But for now, this is bullish. So the next target is testing the overnight high and then seeing if we can find new buyers up there. So do we poke up there and then instantly pull back down, or do we push above and find new buyers up there? Let's see what happens. Okay, we got a weak high. We consider that high weak because they stopped just one tick from the overnight high. That increases the odds they'll come back and pass through that level again. All right, so that's the test of the overnight high. So the question is, what we know now is they have the momentum. They had the spike up, they had the gap up, and they got all the way to the overnight high. So now the question is, do we still have momentum, or was that it? Did we just get the gap to get up to here? And the way we can tell that is by seeing what happens up here at the overnight high. Do we just poke above and then pull right back down in? Or do we poke above and then start to spend some time and bring in some volume up here above that overnight high? Bringing in volume and spending time increases the odds of continuation to head up and repair the first week reference above at 40.40. Can they hold it? We got 127 people hanging out, only 66 likes. Please smash that like button. I sure would appreciate it. One small thumbs up, it costs you nothing, but it sure does help me out. Got to tell that algorithm to send me some new peeps to learn about the two-way auction process. They don't know what a weak high is. They don't understand it needs repair. Your likes will send them here. Thank you. I appreciate that. Okay, who are these buyers? I can't do a good Seinfeld. But it's an interesting question, RK. Who are these buyers? I don't know. Some of them are obviously covering shorts. Some of them are obviously FOMO, trading into longs. Some of them are overnight traders who are just holding to see if they can get it a little bit further. I try not to worry too much about the why and more about the what. Can they keep holding it? Can they keep the momentum going? Why they choose to? Well, that's not for me to interpret. Speaking of which, we're looking for support right here at 25. Darth Liquidity, just one thumbs up per day can help a trader in need learn about the two-way auction process. Yeah, I just need some photographs of like crying children. Screwball, I know where your head's at and I like it. Got a weak high, pulled you right back into support. They've got the momentum. Come on, buyers. The shot photograph of before and after. That's actually a good idea. All right, no support at 25. Ticks back below the zero line. Dun, dun, dun. All right, so they got to hold it here above 40.20. If they break back below, then we know that momentum was just to get us to the overnight high. And we did not find new buyers up there. So that passing back through here would increase the odds we're trying to fill the gap. So it's now or never for these buyers in this gap and go. Can they hold it? Dun dun. Dun dun. Dun 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 dun. All right, so this lower support held. So now the question I'm asking myself is, does this previous support become resistance? If the buyers are going to remain in control, they should be able to push right back through the halfback. If it becomes resistance, that is less bullish to see. All right, so as we print the B period, we are literally in the exact spot we opened 30 minutes ago. Market's gone nowhere. Chopping. Who's it going to be? Buyers or sellers? Above the opening price, below the opening price. Above the opening price, below the opening price. Buyers, sellers, buyers, sellers. All right, so previous support is becoming resistance. That's a little bit bearish to see. We're still looking for support at 40.20. All right, third time's a charm. Testing the support once again. Testing that zero line on the ticks once again. Scooball says, choppy like always. Yes, sir. But we knew that going into it, so we're forcing ourselves to keep a clear mind. What is the market-generated information saying? Right now it's saying gap and go. Right now it's saying support at the zero line. So right now, it's still bullish, even if they're going to make it choppy. I reminisce over the good old days when passing through the opening price on a gap day was instantly good information. Oh, we're through the open. That's bullish. Oh, we're back. It's bearish. Used to be so simple. But now we just spend an hour to come back to the same price again. All right, here we go. Moment of truth. So up till now, the buyers have had the momentum, but they've gotten nothing for it. All they got was to test the overnight high. They got no continuation whatsoever. So if they step in now once again, we know they're very strong hands. But if they don't, if the market passes back through 20, then we know the sellers are taking control. We've run out of buyers. And then we look to fill the gap. So literally, they hold this, or we look for a gap fill. But Charles, you were so bullish just a few minutes ago. What's changed? Well, what's changed is the information the market is giving us. The momentum told us we could get to the overnight high. It did not tell us if we'd find new buyers up there. We did not. That's information. As the market pulled back down, we turned support into resistance. That is information. We are also spending more time and bringing in more volume below the opening price than above it. That is information. So slowly but surely, the market is telling us that the buyers are running out of momentum. But they haven't run out yet. And that support will tell the tale. Let's pop over and take a quick look at the NQ. See what the Q's up to. Okay, so the Q got a gap fill and is on a gap and go right now. Q looks bullish. So I would say with the NQ, you're bullish above the opening price, 12,920, looking to test the overnight high as long as they can stay above there. Interesting. All right, so now we're back into that resistance, right? Back into this same area where we ran out of steam before. But what's different this time than the last time? Well, we brought in a whole new set of buyers, right? Look at that. A whole nother set of buyers came in and are now trying to poke at that resistance. So if they get nothing for it, if they poke and they can't get through, will there be more buyers the next time around? Let's see. Resistance once again. Shout out to all the scalpers who trade 2-point ranges. What? Killing it. Okay, so this is the fourth time we've pulled back down and given the buyers a chance to buy here. They've gotten nothing for it. Will they buy a fourth time? Or is the market ready to break? Oh, they're still playing. Round 4. Ding, ding. All right, and the resistance holds again. Back to test the support again. Fifth time's a charm. Boom. There's the break. Okay. So obviously we are no longer bullish. We're back to neutral and looking for a gap fill. The buyers just lost. They tried and tried and tried, and they got nothing for it. So likely we will need to give a better location for stronger hand buyers to step in. That might be down here around 40.10 or the gap fill around 4,003. Looking for a gap fill. But Charles, what about the buyers? There's just not enough of them. They tried and they kept getting smacked down. They got smacked down at the overnight high, and then they got smacked down again and again at the halfback. So they need to bring in stronger hands if they want to make another poke. Or should I say, stronger bots. Frito says, this is stupid. And Scooball says, this is genius for the guy who made money on it. Yeah. Whoever this guy is, the guy who's going short 500 contracts, long 800, just again and again and again, that person's doing very well for themselves. It's the rest of us that are screwed. Scooball says, liquidation. Who buys liquidation? Strong hands? Yeah, but we have yet to decide, is it a liquidation or a liquidation with new money selling? My guess is new money selling. And that because of what I just explained. They got smacked down up here. They got smacked down right here. I doubt it's going to take just one little liquidation to suddenly break through all that. But where there will be strong hands. Novice trader. Yeah, we're one like away from 100, guys. Is there just one person out there that thinks I'm all right? It's like, you know what? I'd give this guy a thumbs up. There it is. Thank you so much. Appreciate you. Oh, and you. Thank you. Oh, and you. Thank you. Look at that. See, that's a weak low on the Q as well. So the Q came back exactly to yesterday's high. That's weak. Computers bought that, not people. People could have bought it the first time, but that second time, that was a computer. So now, if the Q pulls back down into yesterday's range again, it gets back down below 12,896. That is actually bearish to see, as they could not get to the overnight high, and they're back inside the previous day's range. Andrew, Chop Central, destination, Stop City. John Q says, my stop is 4 ticks on the NQ. 4 ticks on the NQ. John, how? How are you not instantly stopped out every time? Skills, he says. Yeah, apparently. Okay. So just to start to show the way these things stack up, the information starts to stack up. Well, now the internals are beginning to trend lower, right? Now they're able to keep those ticks below the zero line. We actually see the momentum all morning has been building down, not up. So that increases the odds that they're trying to fill the gap. A lot of volume starting to build right on 15. Does that spoof? Does that just disappear? So you can see what they're doing here if you look at the book map. They use this iceberg to make the market stop exactly where it stopped before. And so then traders start to go long and they put their stops right below there. So you get stops and stops and stops and stops. Boop, there you go. And then we just took them out as I was talking about it. Okay, so the market is now one time framing lower. That is bearish, increasing the odds of a gap fill to 4,003. The market is also now one time framing to the downside, which tells us that as long as this momentum continues, they can continue to push the market lower. So we're looking for how long can each 30-minute TPO make a lower high. As long as they continue to make lower highs, the momentum to the downside will continue. We are now looking for resistance at 40.18, the base of the B period single prints down. Curly says, what is the CVD? That is the cumulative volume delta. And to be totally frank with you, I don't really use that at all. I just leave it there because some members of the brigade like to look at it. But for me, when it comes to the book map, I'm mainly just focused on the liquidity that's in the order book compared to what fills when the market actually gets there, and the stops on icebergs, which is an add-on. Uncatchable Trent. Gotcha. Gotcha. Smashing the subscribe button. Welcome, brother. Happy to have you. If there's anyone else out there that's watching for the first time, perhaps, maybe you consider pushing that subscribe button. I don't go live often, but if you click that subscribe, you'll be notified when I do. Actually, you got to hit the subscribe and the notification bell. Then you'll be notified when I do. Also, if you're enjoying this, you might consider joining the brigade. I do these live streams every day for the first hour. And all you got to do is pay $10 a month. Less than a single tick on the ES. John, yep, this is on the public stream. Everyone knows what you're saying now. Thank you, Tim. Appreciate you. Sir Kenneth? Shri Kenneth? Welcome. Sorry for murdering your name. Trent. Nice. You got the right idea. This to me is starting to feel like one of those days where they grind it and they grind it and they grind it to just like instantly break it one direction or another. I have a feeling the gap fill will be that final break. So like we'll head down, we'll fill the gap to 4,003. We'll probably come back up. We'll probably spend a bunch of time just going sideways right in here. And then when we finally start to break down into yesterday's range, that brings in the momentum. Or it might be the base of the spike as well. We might grind in here. But it certainly feels like they are winding it up, pulling that rubber band back more and more. David says gap is filled. No. On the NQ it is, but not on the ES. The gap fill on the ES is 4,003. A 7 mile reach. What is the ticker for the tick chart on TradingView? It's just tick, T-I-C-K. Yeah, tick is just T-I-C-K, and tick Q is just T-I-C-K-Q. John says, I'm scared. What are you scared of, John? I mean, let's look at it this way. Let's just start to play out our options, right? What is the market likely to do today from here? Okay, well, the gap and go is gone, right? That momentum is gone. We don't still believe that momentum. So we know we're either going to do one of two things. We're either going to fill the gap and then go sideways, or we're going to fill the gap, fail to find support, and then start to crash lower. Well, either way gives us opportunities to make money. If we fill the gap and we don't head lower, we'll have rotational trades for the second half of the day that we can look for opportunities in there. If we fill the gap and we don't find support, particularly if we break the base of the spike at 39.96, well, then we know we're monitoring for continuation lower, 1 week reference at a time. So that presents us with opportunities. So there's nothing to be afraid of. What am I to fear? I'm to make money off of rotation, or I'm to make money off momentum. Both are opportunities to make money, and both I get to be completely in control. I don't need to chase trades. I can just wait for them to come to me. And waiting, I must do. But there's no reason to be emotional. The market-generated information is giving us crystal clear signals. We just choose to follow them or not. Neither should be an emotional decision. He says, I'm scared of Pappy. See, I would love Pappy, right? Let me see that momentum fail. Let me get short for that failure of momentum, and then let Pappy take control, and I can make my money. Nothing wrong with that. No reason to fear Pappy. GeoCap says, are settlement prices 4 p.m.? For me, yes. 4 p.m. on the dot, that is the closing price. And that is what I use for gap fill. And I use that because it works again and again and again, as it appears it will today. Also, I just want to take a quick second this morning while I have everyone's attention and just talk about the boot camp. So if you don't know, I've just started this new program that I'm calling the boot camp. Did our first one a month or so ago. Had a lot of positive results. And essentially what the boot camp is a chance for you to work on your psychology. It's not about the market. It's not about teaching you how to read charts or predict the market's moves in any way, shape, or form. It is purely an exploration into you and your personal psychology and how you make decisions when you choose to enter trades. The structure of the program is set up to be most beneficial for this type of education. So whereas the workshops are just me literally lecturing to you, teaching you a thing, and then it's all on you to figure out how to use that information, the boot camp is different. It's really you doing the work and me just guiding you. So each morning, an hour before the market opens, we have a 30-minute to 45-minute long lecture where we basically just cover a certain subject matter that I want you to think about that day. Then I give you a trading exercise to do on your own throughout the day so that you can come to learn the subject matter that's being taught through practice in the real market. And then in the evenings, a half an hour after the market closes, we do another Zoom call where we invite everybody to discuss what they learned throughout the day. And then sometimes, some days I'll give you homework assignments to do overnight for the next morning. So the difference between the boot camp and the workshop is that the boot camp is purely psychology. It is purely a self-exploration into you and how you tick. And it is also one where you're doing most of the work, where it is an exercise for you to explore yourself, and I just guide you in that. We only do 15 people at a time because obviously, a Zoom call would get kind of crazy if you had more than that. And there's only 11 spots left for the next boot camp, which starts 2 weeks from today. So if you are interested in exploring your own psychology and you got $145 to spare, you might consider checking out the boot camp. There's a link in the comments pinned at the top. Mark says it looks like the boot camp teaches you how to get abs. That's 100% right. Brain abs. RK, that sounds like a $2,000 course. Only $145. It's worth noting, I sent out a survey after the last one. 2 of the questions I asked in the survey. Do you feel like your trading has been improved by this course? 100% of people said yes. And then I said, do you feel your life has been improved by this course? And 100% of people said yes. Just throwing it out there. Wiz25 says to get bullish must have cessation and then volume over 4025. Yeah, to get bullish now, really all I would need is cessation at this point. Now, this is not what I think is going to happen. To me, this is the least likely thing to happen. But if the market were to turn around and head back up now and get above that B period high, well, then I'd have cessation of the momentum down. Okay, so that would tell me we're not going lower. That'd be a little bit bullish to see. We would have a weak high in need of repair. So that's a magnet pulling on price, which would be a little bit bullish to see. And we'd have a gap and go because we never actually filled the gap. So that would be bullish to see. So if the market were to randomly right now turn around and head straight up and get cessation, that alone would be enough to get me bullish. But like I said, to me, that is the least likely scenario. It is significantly more likely that the momentum will continue until we fill the gap, and then we will either go sideways or break lower from there. Okay. Cessation is 4028, a point above the B period high. Frito says 2 ticks shy of a fill at 18. That's a real bitch. So close. Well, don't worry. After we tap the gap fill, we'll probably head back up and test it again. Oh, sorry. Trade is gone. Bye-bye. All right. So now we've got a second set of single prints that we've left behind here from the C period. So that tells us that now, if the sellers want to remain in charge, they got to get it going right now. Because if they let the market come back up here towards the C period high once again, they risk cessation. And they have a slightly higher chance that they'll get cessation because they left that one single print behind. Okay? So this is a very, very good low risk short, but very, very close to cessation. So if the sellers want to remain in control, they got to get to that gap fill soon. Can they hold it? Can the sellers hold it? Infinity BTC hitting critical zone? Well, we'll take a look at that after we repair this poor low and fill this gap. One market at a time. David, I don't use 5 p.m. as a closing time. I use 4 p.m. Hustler Forever says that price action is wacky. No more wacky than normal. Or what's become the new normal, basically since December. It's just all computers all day long. Ours is not to wonder why. Ours is but to read the MGI. Market's trending lower, and it's got a gap that needs to fill. Andrew, what is more important? What happens at the gap or the single prints? It's not really a what's more important. It's what matters when, right? So both are a sign of excess that need to be backfilled. A gap needs to be backfilled. Single prints need to be backfilled. So the question is, if you've got a gap below and single prints above, which one will get filled first is really what you're asking yourself. And that's about momentum. You then switch from thinking about it from that stance to thinking about it of who's been in control, right? If the buyers who keep buying get nothing for it, are they going to keep buying? What about the sellers? The sellers who sell today, every time they make money, won't they want to keep selling? That's momentum. The sellers have control over the buyers, so they have the momentum. So if you've got single prints above and a gap below, both needing to backfill, the more likely one to backfill first is the one where the momentum is trying to backfill it. Now, once it's done that backfilling, once we've got that gap filled, that magnet turns off, well, then we start to think about those single prints and vice versa. So let's say right now we failed to fill that gap and we turned around and we started to come back up. Well, then we'd think, okay, we're going to backfill the single prints first. So we just look for the momentum. Where is it? And then that's just the target of where that momentum is likely to end. Okay, D period's making a weak low because it's stopping one tick short of a gap fill. I can hear Fredo right now. I didn't get a fill. I missed it by a tick, he'll say. I got short, but they didn't fill me on the take profit. What is the software I'm using? The one you see on the left side of the screen, that's market profile software. The specific company I use is called Window Trader. There's a link in the description. And then over here on the right, this is called Bookmap. So the market profile shows you the information in 3 dimensions by showing you where the market spends the most time and brings in the most volume. The Bookmap shows you where the where the liquidity is before the market gets there compared to once it does. How much do they cost? Yeah, you can see by clicking on the links. I will just say for Window Trader, you also got to pay like $100 for data. But there's a lot of cheaper or free versions of market profile software out there. As the old saying goes, do your own research. All right, Infornity. Let's take a look at the corn. Bitcoin. Yeah, a little bit of a pullback here. I would say it probably needs to test 25, 24, 25. Yeah, 24. So this is what they always do, right? They always do those Bert Simpson. So they'll come back down. Bert Simpson. Bart Simpson. Bert Simpson. Hi, I'm Bert. So yeah, they'll come back down. They'll test 25. And then you'll see if they have buyers there. All right, so there's the gap filled. So now the question becomes, do we run out of sellers here? Is that all they're going to get for it? Or will we get further downside continuation? It is important to note that inside the spike up from Friday, so anywhere above 39.97, we have a lot of support in here. The spike was telling us that we had momentum up. So until we get below that spike, we don't want to get overly bearish. There was nothing wrong with getting bearish to fill the gap, But now they're going to have to bring in new sellers here to keep that momentum going. So I'm monitoring to see what happens. Do we find support and get cessation, or does the trend continue? So far this morning, the market gave us two excellent opportunities. It gave us a gap and go first thing in the morning to head up and test the overnight high. Its failure to find buyers up there gave us the trade to fill the gap. That's two excellent trades. So now we can just sit back, relax, and wait, because the next one will be a little bit harder, right? They're going to make us work for it. They may just chop and chop and chop. So we need to be cautious. Either we get cessation, meaning we get the end of the trend, or we break below the spike. In the middle here, some sideways is likely. Do with that information what you will. All right. Well, they did that quick. Cessation of the trend. So that tells us the momentum to the downside is over, and that the highest probability from here is that the market is just going to go sideways. This confirms what I am seeing as the highest probability in my mind as well, which was simply that we did not have the buyers to keep the momentum going, but we also didn't bring in a bunch of bearishness, didn't bring in a bunch of sellers. So that tells me that what the market is most likely to do today is spend the day just, going sideways, essentially just bringing in new buyers up here at a higher price to keep that momentum going. Okay. There's two ways that we could balance off all of this excess that we created on Friday. One way would be to pull back with price to balance off that excess. The other would be to use time to balance off that excess. If the market wanted to use price to balance off that excess, they likely would have kept the trend going and pulled back down into yesterday's range. So the fact that they did not do that, so first they did not have the momentum to keep going, but then they did not need to pull back down into yesterday's range to balance off the excess, tells me that door number C is the highest probability, which is rotation in this area up here, so that they can, spend enough time to bring in enough volume to keep the momentum going. Okay. So basically what I am assuming from here is that the market is just going to go sideways. The only thing that would really get me interested in a trade other than rotation, right? Other than selling above value or buying below, would be if the market got below the base of the spike from yesterday, 39.96. So even if the market poked below the D period low, I would assume they're just going to turn around and come right back up. But if they were to poke below that D period low and keep the momentum going to get back below 96, then I would begin to get bearish for further downside continuation. But just knowing the way the market has been lately, the way rotational markets don't often respect specific highs and lows, it wouldn't be unreasonable for me for the market to poke down here just to come right back up. Okay. So I remain neutral above 39.96, and only getting below there would really get me bearish. My assumption is for the rest of the day, the market is just going to go sideways. I am looking at some point to backfill the single prints in the C and B period. Where we find resistance above, we'll just have to wait and see. With that, I will bid you all farewell and wish you happy trading for the rest of the day. If you want my advice, it's going to be a tricky one. I think it's going to move very slowly and then pop out of nowhere and move a 10-point range. And then it's going to move very, very slowly and then pop, and out of nowhere, it's going to move a 10-point range. And my guess is we'll close somewhere right around where we are right now, somewhere around the POC 40.12. And it will be very, very frustrating to predict what it's going to do in between here and there. Good luck. All the best. If you're a member of the brigade, we will see you tomorrow morning in the live stream. Thank you and have a great week. Bye.